Yo, what's going on, guys? Welcome back to my channel. Now in today's video, I'm going to be showing you guys my simple covered call strategy. Now if you guys saw my last video, I basically explained that you have to keep your strategy simple. You have to find one that fits you. It can't be super complex, can't be complicated. You're going to confuse yourself. And I mean, you could kind of piece together other people's strategies, but in the end, you have to figure out what works for you. Because if you take one piece from someone's strategy and put it together with somebody else's piece, it might not work correctly, so you might end up losing money. So you gotta test a couple of things, find out what works for you. This is what's been working for me, so I just wanted to share it with you guys. So let's go ahead, let's get straight into this. So BNGO, this is a stock I've been selling covered calls on for about the last month, so I've been getting some pretty decent premiums. But anyways, how do I find these stocks that I want to sell covered calls on? So the first step that I do is I go on YouTube. Now obviously you don't want to go on, you don't want to buy everything every YouTuber says, but believe it or not, YouTube actually does have some pretty good YouTubers out there that do provide the news and the information for each stock. So you want to find a popular stock that a good amount of people are talking about. You don't want to just get into some random stock that nobody's talking about. You want to kind of have some people behind it. Basically go on Google, do your research, listen to YouTubers. Like I said, don't just do what they're doing. Make your decision for yourself. Now, once I do that, I kind of do a little more research. I figure out if this is a company that has a potential good future and, a potential for this stock to go much higher, what their past has been like, just basically what they're doing, and whether I would be willing to hold this stock long term if for some reason it does drop temporarily for a couple months. Then I wouldn't be too worried because I believe in the company, and it won't worry me as much if I believe in the technology that the company has. Now I like to find companies also with kind of a decent amount of volatility, just because if you come up with a boring company and it just moves around maybe 1 or 2% each week or something, the premiums aren't going to be as high. So I look for stocks with a little bit more volatility. I mean, obviously that brings on more risk, but it also brings on greater rewards. So that is how I find my stocks. Now, once I'm done doing my research, I try to find a decent buy price, obviously. BNGO, as you can see, I got in at $14.71 down here. On my other brokerage, I got in somewhere around $11 or something. Those options got exercised today, which is Friday, so I no longer own those. But I find, I wait to get a decent price. I mean, right now, if you wanted to get in BNGO, it's probably a pretty decent area to get into, to be honest, because it's down almost 7%, and yesterday we had this big drop. I mean, if you got in yesterday, man, that would have been nice. It's a nice movement right there. But I try not to buy stocks at their peak. Now, obviously, this time got a little bit unlucky. It wasn't necessarily at the peak, but it was, I got in at a decent price. But like I said, I believe in this company. I think it'll go past that. No problems at all. But still, I mean, you really want to try not to get in at the very, very top, because if you get in at the very, very top, then you could be waiting a while and you're going to have to sell premiums for a lower value, basically. So let's go ahead. Let's get into the options portion of this video, basically. So when I'm selling my covered calls, I used to like looking for expiration dates that lasted only a week, but let's see what stocks have ones that only last a week. Like Mara, they have weekly ones, I believe, but if it expires each week, so yeah, February 26th, you still get $483, but if I go out a full month to March 19th, you get almost double that money. So I mean, it's really up to you with that. I usually do monthly ones, just that's how I do it. But I do want to try out some other weekly ones. I've done weekly ones in the past, but obviously these ones pay the most premium up front. So let's go back over to BNGO, because that was just basically our example one over here. So, well, I bought this one at $14.71. So, but let's just say hypothetically, I bought this at $13.64 at the share price that it is right now. So what I would do is I'd buy 100 shares at $13.64, and I would sell the right above or almost at the money strike. So we'd do $14 we get $2.30 back each share. So that's $230 you get credited to your account premium. Now, if this thing goes above 14, and then at expiration on March 19th, if it gets exercised, I get another $46 as well. So that's $276 that I would get from that trade, and that's a winning trade. Boom. Now, if I wanted to get back into this company, then yeah, I'd probably wait for another pullback and buy it again. But the reason I sell the at the money strikes is just because I'm using this as basically a source of income. I have my other investments and I have my other shares of BNGO that I want to hold long term, and I'm not selling covered calls on. But this is just strictly a source of income basically for me. So that's why I sell at the money ones, because they pay the most premiums right here and it gets your cost basis down a lot. So say $13.64, if you get $2.30, that's $11.34 now that you only paid for the shares. Now, say you're in a situation like I'm in right now. So I bought in at $14.71. It's obviously below my strike price. So it's at it's below my share price. So now it's at $13.64. So on open on Monday, this premium might not be as big on Monday. It might actually raise up. We really don't know what's going to happen. But at the market open, if it's at $13.64, I am still going to sell my $15 strike price call. Now, the reason being is because if I do 14, then I'm going to lose some money. Now, the reason I don't want to sell a $14 call right here is because I don't want to lose money on my shares that I paid $14.70 for. So I'd automatically lose $71 if it gets exercised at 14. So I'm still gonna sell the $15 one on Monday. Now, here is the beauty in this strategy. We got a premium over here of 193. Like I said, it might move around. It's probably going to be a little bit less or a little bit more, depending where the share price goes on Monday morning. But the reason I look for stocks that have high volatility and ones with bigger premiums is because of this reason right here alone. So I've already got my cost basis down from $14.71. I'm not sure how much I paid, but let's just use this example. $13.64, I get it down by $2.30. So that's $11.34 each share. So that's like paying $1,134 for my 100 shares. Now, say Monday opens up, I get another $1.93, and that brings my cost basis down to $9.41. So even if this stock goes all the way back down to $9 to $10, and I sell it there, I'm not necessarily losing any money at all. I'm going to have to give up my premiums basically to cover those losses, but technically I didn't lose anything yet. So that's the beauty of this, because if once your cost basis is low enough, it's almost like you just own the shares outright 100%, and you basically paid nothing for them if you think about it. So if I were to sell this $2.30 call every single month, it would only take me 6 to 7 months to get all the money out of this stock that I originally put in. So that's basically why I find ones with bigger premiums, because I just think of it that way. Like if I could get all my money back within 1 year, now obviously the stock is going to fluctuate. You might not get as big as premiums, but you could probably get your cost basis down to zero almost within a year. Now, another crazy stock that I got in is Riot Blockchain. This one has an absolutely insane option. So I bought in on this one at $64 or something like that, and I sold a $70 strike price. And this one, I didn't do it exactly at the money, because I saw like some good growth in this, and the premiums are high enough that you could go out of the money a little bit. So just ignore this. Pretend that share price right there, the $71.35, pretend that's $64. So I bought it $64 and I sold a $70 strike price covered call. Now it wasn't $2,300 at the time. It was around $1,911, but that is still an insane amount of money. You put in $6,400. I almost got $2,000 out immediately. That's 25 to 30% of my money back right away. If this thing drops 50%, I don't even lose that much money. Like I said, I wait for it. I wait, sell another strike price, I'd probably sell one at 65 if it drops all the way down to like, 40. And I still get a huge premium. Now, obviously, these premiums change. It's kind of hard to predict what the premiums are going to be. But obviously, with all this volatility, the premiums are still going to stay pretty decent. And I mean, obviously, Riot and Mara and all those with Bitcoin going crazy right now is just, it's a good bet, to be honest with you. So that is basically my strategy. I know I kind of went off on like, random things here and there, but basically I'm buying at the money strike price. It's the biggest premium. And, if it goes above it, it doesn't matter. That's great. It gets exercised. I make some money. Boom. Doesn't matter. Didn't lose anything. I collect my premium and I collect my stock appreciation. I walk away. Now, if I want to get back into the stock, like I said, you got to wait for like a decent price. You got to wait for some sort of pullback, and then you could get back in. Boom. Sell another covered call. Boom. And if it goes down, like I said, with these big premiums, you could get your cost basis down to zero pretty quick. Just a little recap for you guys. Find stocks that are popular, that a lot of people are talking about. Second, do my research, figure out which ones have the biggest future and which ones I believe in for long term, just in case they drop. And find ones with some volatility so the premiums are bigger. And basically just sell at the money covered calls, because like I said, this is for income. I have my other investments separately. This is just strictly for income. And that's basically my strategy, guys. So if you guys haven't seen my last video, I made a video. I'm trying to make $10,000 a month by the end of this year just by selling covered calls. So I have my first week out. I put it out a couple of days ago. So if you guys want to go check that out, I'll be uploading a second one sometime next week. But stay tuned if you guys want to follow that. But I hope you guys enjoyed this video. If you did, make sure to leave a like. If you have any other questions, leave them down below and I'll be happy to answer them for you guys. But with that said, I'll see you guys in my next video. Peace out, guys.